This video is to be used for educational purposes only and is not intended to replace individual research or licensed investment advice. Unique experiences and past performance does not guarantee future results. Trading stocks, options, and spot currencies involves substantial risk, and there's always the potential for loss. Your trading results may vary. No representations are being made that any software or training will guarantee profits or not result in losses from trading. This is the Premier Trade Market Wrap.
This is the Market Wrap for Wednesday. I'm Jack Lott on the James Dix Financial Network. The Federal Open Market Committee announced that it's taking a series of steps to give the public a greater understanding of the basis for its interest rate decisions. In a statement, the FOMC, charged with formulating U.S. monetary policy, said that it would provide more timely information about the evolving outlook by releasing its economic projections 4 times each year rather than twice as it's been doing. U.S. businesses built up their inventories modestly in September but sold more goods than they kept. Sales at U.S. businesses rose 0.6% in September. That's the most in 2 months, while inventories increased 0.4%. The inventory number is a 2-month high. Wholesale prices rose 0.1% in October as food prices rose and energy prices fell a bit. The core producer price index, which excludes food and energy costs, didn't grow at all. Retail sales grew at a sluggish pace in October as many cash-strapped Americans continued to struggle with higher gasoline prices, less equity in their home, and tighter credit availability. The Commerce Department said total sales rose 0.2% last month from a revised gain of 0.7% in September. Mortgage Bankers Association reporting that mortgage application filings actually increased 5.5% last week on a seasonally adjusted basis compared to the previous week, driven by a jump in applications to refinance existing loans. 3 states, California, Florida, and Ohio, continue to dominate new foreclosure filings as most of the nation saw increases in the third quarter. Also today, Bear Stearns companies will take a $1.2 billion write-down in the fourth quarter related to weakness in its credit portfolios. In Forex news today, the dollar resumed its recent familiar pattern, gaining on the yen but slipping against other major rivals as risk aversion faded in the shining light of a stock market rally. The dollar extended gains against the yen after data showed U.S. retail sales in October were in line with market expectations, while the PPI inflation was benign. Japan's low interest rates make the yen a popular currency for carry trades, in which investors borrow lower-yielding funds to buy higher-yielding assets. Such trades are less popular when risk aversion rises. Japan's third-quarter gross domestic product data revealed that the nation's economy grew at a 2.6% annual rate in the third quarter, but the prior quarter was revised downward to a 1.6% contraction from a 1.2% contraction. In China, the yuan fell nearly 0.3% versus the dollar, its biggest daily drop since China stopped pegging its currency to the U.S. dollar in July of 2005. The People's Bank of China set its official parity rate for the midpoint of yuan trading compared with a record high rate the previous trading day. The central bank allows the yuan to trade in a band of 0.5% on either side of its parity rate. In Europe today, sterling paired early gains after the Bank of England's quarterly inflation report suggested UK interest rates would fall next year. And in Canada, Paul Jenkins, the senior deputy governor of the Bank of Canada, said a persistently high Canadian dollar could pose a threat to Canadian economic growth and push inflation lower. Jenkins said that the rapid and significant decline of the dollar increased the risk of disorderly adjustments to global imbalances. That's the U.S. dollar. Scheduled economic reports coming out on Thursday include the initial jobless claims report for the week of November 19th, the CPI for October, and Philadelphia Fed Index for November. In earnings news today, Macy's reporting a profit of $33 million in the third quarter. That's in contrast to a slim loss last year. Daktronics reporting fiscal 2008 second quarter profit falling 10% to miss Wall Street's expectations. It was hurt by supply chain issues at one of its manufacturing facilities. And Regency Energy Partners LP posting a loss of $12.8 million compared with an $11.3 million loss a year ago. Scheduled earnings coming out on Thursday include JCPenney, Intuit, Agilent Technologies, Franklin Covey, Kohl's, Starbucks, as well as Tyco International. And a few stocks in the news today. Ethan Allen's Interior said his board increased the company's stock buyback authorization to 2 million shares. Arvin Meritor narrowed its quarterly loss on sales flat at $1.6 billion. Eddie Bauer Holdings said its third quarter loss narrowed to $16.4 million or 54 cents a share. And Long's Drugs said its board approved the buyback of up to $200 million worth of shares. And that is the market wrap here on the James Dix Financial Network. I'm Jack Lott. Have a very pleasant good evening.